Let's go ahead and get started. All right, first of all, I'd like to reintroduce Jenna Bonham, who's going to be on here with me, and she will be working with me to help field any questions that we have today, and also kind of keeping the eye on some questions and being able to answer them through the question and answer dialogue there. The agenda today is similar to what we did last time, although I'm not going to be going into the details of the law as explained last time, but only talking about the updates to the law and then going through the updates that I've sent out via PDF and email. Some of these things are still evolving. When we set the date for today's webinar, we anticipated having guidance from the IRS, for example, which we don't have. And so also the CARES Act, so the big stimulus package that passed Friday and was signed into law, also modified this a little bit. We've been also working very closely with the Viewpoint product team, Gary Gilmore, who may be on this call today, and Greg Sykes. Both of them have been extremely helpful over there. They're the head of the Vista product over at Viewpoint. They've been extremely helpful in reviewing the PDF that I sent out and giving corrections and updates. And they've also pushed that out to all customers through their help. You can find the same screenshots, etc., in Clearview. So with that being said, I'm going to go ahead and jump into it. Remember that at any time you can ask questions in the webinar itself. This is recorded and will be available on our website. Our work, this thing has definitely kind of, there's just been an immense amount of interest, immense amount of work that has been done by many different people. Different people have emailed me with corrections and suggestions and questions. I really appreciate all that you guys have done there. Please keep them coming. It's certainly, I do not have a monopoly on this information, and I'm trying to stay abreast of everything that comes out as it comes out. I'm going to share my screen here, show you some of the tools that you guys have available to you. Let's see here. I just began showing my the screen here. What we've done on the Silvertrek page is we put together just a little landing page called the Coronavirus Response Act in Vista homepage. There's some things here, upcoming webinars. So we're doing another webinar, just a repeat of last week's for those who missed it, because we found that some people would wish to have a second one. All of the basic setup guides and recordings of past webinars are here. If you guys would like to have us set it up and get the advanced setup, you can get in touch here. And then we're also preparing a frequently asked questions page specific to Vista and to this law, how this is going to get implemented, etc. We also have this. All of you guys who are on this call are already on this email list, which is just all of the updates. The updates that we're going to be going through today are the updates that I sent in those emails. I also found some stuff out in the last 24 hours that I'm going to be also going through that I have not yet had a chance to put into the PDF and the email. And this is all available for you. This webinar will also be available on the same page, so feel free to go there. I'm going to switch over here to my whiteboard, and we're going to talk about some of the things that have changed in the law. Well, first of all, two big things happened. The Department of Labor has issued their guidance, and that was the biggest first thing that happened. The guidance from the Department of Labor clarified a few things and also limited some other things, so we have clear direction from them on what can be counted and what can't be counted. There was also the CARES Act, like I mentioned. This was the homework, if you guys can still see me on the webcam. This was my homework last week, and I brought home the law and read through it. There was specifically in Division F of the law, it did change some of the of the information that we know about this law. So it just modified some of the information. I'm sorry, not Division F, Division E. So we'll be going through those two things briefly. And like I said, I don't pretend to be an expert on all things here. And if you guys have, if you hear anything that I'm saying that is different than what your CPAs have told you, your lawyers have told you, etc., please let me know. I am doing my best to stay on top of everything, and I would like to hear from you. Okay, so starting, if you guys can see my whiteboard here, first of all, the with the Department of Labor update, the new effective date is 4/1/20. That's today. And so this isn't an April Fool's joke. It really is today. And specifically, the Department of Labor has said that this is for all leave taken on or after this day, not paid on or after this day. So this is leave taken, not paid. So that means that if you're from today on, the sick leave, both the COVID-19 employee, COVID-19 caretaker, and the family leave, the 10 weeks of family leave following that are now in force, and that means that next week's payroll, you are eligible to take this and pay for it. Second, there was clarification in on the Medicare tax. So in the webinar last week, I had said that the new law provides that this will not be subject to Social Security or Medicare. That is not true. The sick leave time, sick and family leave, both are they are not subject to employer, and this is important, employer Social Security. But they are subject to, both of these two things are subject to employee Social Security. So they are subject to employee Social Security, and they are subject to employer and employee Medicare. Prior, I had mistakenly said that the employer Medicare is not subject, and that is incorrect. These wages are subject to employer Medicare. So it also provides in the law that you can be reimbursed, or you can have a credit reimbursed for employer Medicare. So Social Security, it's not subject to Social Security. We don't even accrue that liability. But the Medicare, we have to accrue the liability, then we get that reimbursed. And if you want to know why, then go ask your congressman, because that seems really crazy to me. But I shouldn't go on record saying that. So in the net effect is the same, but we do have to account for this differently. That we're going to have the employer Social Security not as a basis, and then we are going to have the employer Medicare. We've been going back and forth with the Viewpoint team on the best way to do this, and we will be providing some guidance with their coordination on how best to set this up in the next rendition of the PDF. there's some concerns there about the way that would actually flow through for those of you using Atrix, and even those of you who are filing through your filing your EFTPS payments through your bank, etc. That there's some concerns about how that particular thing would be accrued and then taken back as a credit. So number 3, under the new law, and this was the CARES Act that passed, the DOL, or that you do not have to pay any more than the various limits. So the limits, the daily limits, I'll just talk about the daily limits of 511 per day. So the 511 per day and the $200 per day. So if you guys remember from the last one, that is the last webinar, this is for the COVID-19 employee, this is for the caretaker and the family leave. So the limits of 500 and 200 a day are, you can also limit the pay, even if 2/3 would be more than that. So in other words, if somebody is getting paid, their normal wage is $1,000 per day, and therefore when you multiply this by 2/3, they get paid $667 per day, right? You can further limit this. You can further limit this to either 511 per day or to 200 per day, depending on which classification they're doing. You do not have to pay them more than what you can get reimbursed under the new law. So we can limit it, and then we can get that back. All right. Number 4, under the new DOL guidelines, you can pay less than minimum wage, as long as their starting pay is above minimum wage. 2/3 of that can be less than. So if we're just going to use the federal minimum wage as a guideline, I think it's $7.50 right now. Now I'm probably going to make a fool of myself for not knowing that number. I can multiply that by 2/3, and I can pay them less than that under this new law. That is okay, even though the new law, even though that's less than minimum wage, that's fine under this particular law. Okay, so here's a tricky one, number 5. So this is related to number 3 here. If you pay more than the minimum allowed, or I'm sorry, more than the limit is what I should say. Excess wages are subject to employer Social Security. Remember, I said here, sick and family are not subject to employer Social Security, but they are subject to the other employee and employer Medicare and employee Social Security. However, if you pay more than the limit, in other words, if you pay more than the 511 per day, $200 per day limit, then those are subject to employer Social Security. This is problematic in the Vista setup if you do not limit your earn codes to 200 and 511 per day, because you, as an earnings code, you only have one or the other. So our suggestion, and we'll be going through this suggestion on this, use a different earn code for excess wages. In other words, if you're paying them more than the 2/3, if you're paying them actually more than the limit, then of course you can do that. I mean, there's no law that restricts how much you can pay an employee, but that's just normal wages at that point. They can be paid out using their PTO under your policy, so they can top off their sick leave with this. You could just pay them normal wages for something. You could use a bonus. You can use whatever you want that falls under standard Department of Labor guidelines and all of that. But you should not use these earn codes for excess wages. So again, use a different earn code for the excess wages above this limit. What does that actually mean? Well, it actually means that when you post wages in here, in your time card batch, your payroll processor, who should understand the COVID earn codes and should verify that they're put in on a daily basis and that no single day is greater than the that amount. So in other words, we set that up as part of the earn code setup. We said 0.6667, so it should come in, and when they type it in, it should come in as 2/3 wages. If they're like this person up here, where they got $1,000 per day, then you can pull that. You can see that it came out 667. They should only be getting 511 or possibly 200. Your payroll person should catch that at the time that they're posting the payroll time card batch, modify it there. Okay, that's number 5.
Hey, Michael, quick question from Dan. So as we're reading this, that contractors are not allowed to use this for this week's payroll, correct?
For last week's time taken that's getting paid this week, the Department of Labor guidelines do specify that it is for leave taken on or after this day. The IRS and the Department of Labor have also issued clear guidance that they will not be prosecuting people for or assessing fines on people who who are confused and take advantage and trying to take advantage of this law. So you can take that for what it's worth, Dan. However, the law does clearly say that for leave taken today and forward, April 1st and forward. So you would not be able to use last week's time, only this week's time, or actually the last 3 days of this week, last 3 weekdays of this week. Cool, thank you, Jenna. All right, another clarification. So number 6, there was language in the law about who would actually be eligible for this, and basically, in order to try to get as many people to work as possible, rehired employees, people that you hired after March 1st, even if they don't qualify otherwise, they do qualify for sick leave. So this is under the new CARES Act, and this is important. If you guys were anticipating slowdown in your businesses, you had laid people off, and because you didn't have any work for them, and you realize that they would qualify under the new COVID sick or family leave laws, you can rehire them for the purpose of giving them sick leave, and they will qualify. And number 7, this is what I was going to mention that I had mentioned to Dan earlier. The IRS is waiving their standard failure to deposit penalties for companies that anticipate a credit under the new law. And they have their normal things in there about making sure that this is done in good faith. So they could give you a failure to deposit if they find in an audit or whatever that you just chose not to pay, even though you knew you didn't have any credits, etc. They're waiving the failure deposit specifically for people who anticipate they anticipate a credit. So for companies who anticipate credit only. Like I said, the IRS and I feel like kind of like a news junkie here. I've been going to the newsroom and hitting F5 all morning long, hoping the IRS was going to come out with something cool that I could tell you guys. IRS still, as of now, has not given anything as far as additional guidance along this line. We do hope for that guidance, and we will update you as soon as we can on that via the email. Also with changes to the PDF if necessary. We hope nothing will be necessary, but of course that is unlikely. The IRS has been very busy, obviously, with the CARES Act. There's a lot of things in there for them. You know, the stimulus checks to people. Don't call them, apparently. Apparently, they've been getting a lot of calls on that. And then also the CARES Act has that small business payroll protection plan, that PPP program that everybody's very busy with. So what we're doing is we're going to be monitoring that. We're going to be monitoring the Department of Labor websites. We're also fielding some questions from people who have individual states information. Very few states have actually weighed in on the changes to FMLA and how that affects there. Although at this time, since this is only an increase to existing, that we don't anticipate any conflicts. That's not actually true. We anticipate minor conflicts, and because the federal government and state governments there's always a little bit of kind of scratching our heads and trying to understand exactly how they work. If you guys find any conflicts between the states that you're in and their guidance that they're giving and the information that I've given, or the information you understand from the federal government, please let me know. I'd be more than eager to consolidate that and distribute it among the group here. Okay, any questions before we move into Vista and we start talking about some of the changes at the basic setup?
Yeah, there's a couple questions on the board. I'll start with the IRS stuff. Do any of the documents talking about that IRS waiver specify when that ends?
Not that I've seen.
So is it good till the end of the year?
I haven't seen what how long that's good for, except that it is good for people who anticipate a credit under the new program. That's all I know. So I can't give you a firm answer. I'll write that down and I'll send that out in the email if I find that out.
All right, and then another question from Jeff. In the last webinar, stated it was signed on March 18th. If we wanted to pay an employee, we could, and that the IRS wouldn't start enforcing the law until April 1st. And now it sounds like you can't pay an employee until today. Could you clarify that a little bit?
Yes, I can clarify that. So the IRS and the Department of Labor have somewhat conflicting guidelines on this. And like I said, the IRS originally said that they're only not going to enforce it until April 1st. And that's what I said last time. That is still the only guidelines we have from the IRS. However, the Department of Labor has come out with their guidelines. And of course, they have two different mandates, right? The Department of Labor is, one of their mandates is to make sure that you guys are all paying your employees in a fairly and equitably. And the IRS mandate is to say that is to collect the excise taxes that have been levied upon you by the American government. So they have two different mandates, and so they don't necessarily always align quite right. The Department of Labor guidelines do say very clearly that the sick leave is only available to employees on or after April 1st. The IRS has not given clear guidance, but they did say in their initial note that it will not be enforced until after April 2nd. But now I'm wondering if they said April 1st or April 2nd. But regardless, that they would not be enforced. At this time last week, it was my impression that we could begin taking this for our employees now. And as of the Department of Labor guidelines that came out last week, that is no longer my impression. I apologize if I made that additionally confusing for you.
And then a question from Valerie. It said, for our craft employees, is there base wage and add-on pay for vacation? The unions aren't releasing the contractors from that requirement, and the time card entry doesn't show any add-on earnings. Any suggestions on how to work around it?
Um, yeah, so unions, we're working closely with one union company kind of as a test child here. The unions under the new law can provide this for their members directly. I have not yet heard of any unions who have chosen to do so, and therefore this would fall on the employers. So the employers have an obligation to provide this to all of their employees, including union employees, unless the union chooses to provide this, is how the law is written. Well, is how I understand how the law is written. I should always be putting that little asterisk on everything. The so the sick time that is being provided directly to the employees, depending on your union agreement, may or may not be subject to all of the union requirements. I can't say without actually looking at specific documents, of course, whether or not yours would be subject to it. But unions, some unions exclude sick time from what they consider to be, all of the extras. Some say no, that absolutely, if it's a payment to our members, then you have to include it, and so all of the dues, etc., are coming out of that. For the purposes of this, the limits will still apply to all of that. The only thing that the law provides for is medical and Medicare employer paid taxes. So any other liabilities that you must pay on top of this. So if you had particular workers' compensation or that you had to pay, or if you had to pay dental insurance, for example, or if you had to pay any other liability, it is not reimbursable. I would guess that that's also true for the union liability payments, that those are, since they're not specifically provided for in the law, that they are not reimbursable, with the one exception of the specific liability to the union for the health benefits. Maybe it's called health and welfare or whatever it is. And that health benefit would be provided for, but everything else would not. That would be my initial guess there. I would definitely talk to your HR team, make sure that, and talk to your union, make sure that that's all correct. Awesome question though. That probably deserves a write-up on how unions handle that.
And a question from Ellie. Do we know when, if the EFTPS site will have a field for the EPSLA?
Yeah, that is an awesome question. Let me pull this here. EFTPS. Gotten this question a lot going on our FAQs, and if I log into this and I say, okay, I'm gonna log in as and look at how this actually works on the actual website. Let's just log in here. Trek. So here we go. I guess I can log on here on this other page. You guys can look at my fancy background while I do this. All right, there I've logged in here, and we go in to make our 941 payment. Now, of course, some of you guys are doing this through your bank and not through the EFTPS itself. But if I'm going to make a federal tax deposit here, and I select this, you know, we're going to do our standard here, Q2, 2020, and settlement date we'll just say is let's just say is next Tuesday. You know, this is for Silvertrek here, and this is where we get to Social Security, Medicare tax withholding. And the question, if I understand it right, is, well, how do we then take this and deal with it? Well, there's the way that we're choosing to deal with, we're choosing here to deal with this is that we're just taking a prorated amount. So and I showed this on the last webinar, but so like we built just that custom report that does this for us, but of course you can do this in Excel. And if we just take the dollar amount that you have, let's say of this $1,000, $200 is Social Security, or $500 Social Security, $200 is Medicare, and $300 is federal withholding, right? Then we just prorate the credit to that. We reduce all 3 wages in this amount, and we hit next. So if my federal tax deposit should have been $1,200, but now I have a $200 credit in here, I just reduce all 3 by a prorated amount and click next. And maybe I can pull up the file here that shows that, so you guys can kind of see how that would actually work. If in the case where there would actually be a, let's see if I can find the file. Here it is. So this is just a picture. So you can see here, this is a picture of the COVID credit. You can see that there was a credit of $200, and our total federal amount that we needed to pay was $587. And so our credit of $200 was spread across these in a weighted average. $91 is now our new federal withholding, $239 is our new FICA Social Security, $55 is our new federal FICA Medicare. And those 3 amounts, 91, $239, and $55, are the amounts that we're going to type in here. So we're going to just type that in: 91, 97, you know, 239, 41, and 55, 98. And obviously this doesn't add up to 1,000 that I put in earlier. And so we reduce all 3. There has been no word from the IRS whether that is going to change. It was my hunch, based on the way that, you know, federal websites are built and whatever else, that this will not change. But they did give specific guidance that we can reduce all 3. We can reduce our Social Security and Medicare and our federal income tax, both employee and employer, in order to take this credit as soon as possible. They also said that if your credit is more than what you have in this week's EFTPS deposit, you can apply for a credit, and they intend to get you a check within 2 weeks. Hope that answers your question.
Yep, looks good. A shout out on the board from Samantha. She had called the laborers union and operating engineers at a NorCal, and it looks like for some of the unions, the employer is responsible for fulfilling those obligations.
All right. Sounds like that's, if you guys are working in Northern California, then we might have an answer for those 2 unions there: laborers unions and operating engineers of Northern California. Thank you, Samantha. Any other questions?
And yeah, question from Valerie on point number 6. If an employee is hired in June and then is impacted by the COVID-19, would you think that they're still eligible since it's valid until December 31st?
Yes, that would be my impression. That if they were rehired after March 1st, they qualify for the sick leave. So that is, yeah, that's Yep.
Then a question from George. If you have an employee that's on a prevailing wage job right now, do you have to pay prevailing wage if he's filing for that sick leave?
Um, so the answer is maybe. Um, the the original law specifies that uh, you pay them 2/3 of their regular pay. Now, if you have already established with them a regular rate of pay, so you know if they're working a combination of private and public jobs, and their private rate of pay is 25 bucks an hour, but then their prevailing wage varies depending on what the job is and what craft and class they're doing on that job, then you just take 2/3 of their regular rate of pay, and there's no harm done as long as that's established prior to this. In the case where you have no established rate of pay, however, so this might happen if you have an employee who always works prevailing wage. This also could happen if you have somebody who's working piecework for you, or if they're getting paid some kind of percentage of revenue or other things where they have no established rate of pay. This is pretty common, like with truckers, for example, where they get paid a percentage of the revenue or get paid a percentage per load or a dollar amount per load or whatever. Um, the law provides for going back 6 months and taking an average, and that's also for the number of hours under the family leave side. So you would have to establish their dollar amount based on the history of the last 6 months that they worked. So you would need to establish that. Now you don't have to if you've already established a private rate of pay, and that's been already established prior to this law passing with the employee. One note on the prior question, I can't remember now who asked it. Jenna, did you say it was Valerie? That is the new, regarding the rehire. The rehire provision comes in section 4606 of the CARES Act. So in Division D, if you're a glutton for punishment, Division D, section 4606 talks about that rehired employee.
All right, and Valerie's also saying it looks like the union stuff may vary quite a bit by union because it looks like there's another union, Southwest Carpenters Trust, that's only going to require H&W be submitted for the leave without vacation, but it seems like it's pretty highly variable.
That would make sense. And if that's true, if I wish I could say thank you to the Southwest Carpenters Trust, because that would be wonderful. If the only thing we have to pay as employers is that which we can get reimbursed by the government, that would be a very good thing to do. And I hope that more people take that example, more unions take that example. But yeah, absolutely, it's going to vary union to union and union agreement to union agreement. Any other questions?
From Trina, where is it documented that the credit needs to be prorated across all three taxes, or is this an assumption that we're running with?
It is an assumption. It is an assumption until we get specific guidance from the IRS. Number one, the IRS has said you can take all three, so that's not an assumption. That you can take all three. You can reduce the amount of the credit, and that was on their original note that they had, which was with the Department of the Treasury. It was the Department of Treasury and what was it called here? Let me find my notes. The Treasury, IRS, and the Department of Labor had that, so that was on there. They said specifically that you can take it on all three on that note. So that this is the prompt payment for the cost of providing leave. So this is under guidance. They said that you can withhold it on all three of them, but it does not say how to do that. And so our only way of doing that at this time is through the EFTPS portal and reducing the amount paid. That would also be true if you're paying through your bank. The only way to do that through most banking forms is by reducing it on all three of those things. And that's why I think that it's probably going to hold. I think it's a fairly good assumption because, I mean, you can think about it. These banking systems, they haven't changed since 1978. And So they're not going to change just because of this law that passed 2 weeks ago. They're not going to have another place. Even if EFTPS has another place for it, the banking systems won't allow for it. And so we're going to have to reduce our amount by our credit somehow. And so that's my assumption at this point. And so of course, as soon as we find out anything, or if you guys find out anything, please let me know, and I'll notify the whole group.
All right, and one more bit of feedback from Ivy. She's saying she was talking to somebody this morning, and they mentioned that it may be possible to get SBA 702A grants loans for some of the required wages when we're waiting for the IRS to reimburse stuff.
Yeah, that's a good point. There is definitely some SBA loans out there. So for those of you who are in an eligible disaster area, SBA is loaning money. There's also the $10,000 grant, which they're trying to get out quickly to everybody, and then low interest, and they've waived a bunch of the requirements as far as qualifications on that. So those are the direct disaster loan grants. And then as part of the CARES Act, a big portion of the CARES Act was $350 billion or some such money for the 7A loan. One note on that 7A loan, they are providing for payroll paid out 2.5 months worth under SBA guidelines, and the sick leave is excluded from that payroll. So basically, anything you get under that 7A loan, just make sure you understand when you're calculating how much your weekly or your monthly payroll is, that you're not including anything that you're using under this sick leave law as to calculate that. And then also that won't be, I believe, if I understand that right, although that's very new and I'm somewhat unqualified on this, that won't be part of that forgiveness. Basically, this is for standard payroll only, the money under the 7A program. But this is not about the 7A program. There's lots of things out there. The banks are the ones you should be going to on the 7A program for that. I just wanted to point that out that I had read that. Any other questions?
All right, and one more. It's from Mark. It says in the original webinar you showed a custom COVID federal tax routine entered in the routine field. The PDFs, neither ours nor Viewpoint don't show this. Is there a calculation difference that requires this, or will the standard federal routine work correctly?
Well, I'm glad you asked, Mark, and I'm wondering, Jenna, did you like pay him off to ask this question or something?
You know, I tried, but it just popped in. He's a mind reader.
No, Mark, good question. So the report that I showed you here, so I'll close this EFTPS. So this report that we showed, this one here that we built, and the COVID-19 routine are routines that Silvertrex Systems has built to make calculation of the credit easier. It is not required to have these routines in order to be in compliance with the law and get your full credit. And so specifically, what does that mean? And I'm going to jump into Vista and talk about that a little bit. But there's some limitations of the basic setup, and the limitations include that the credit that we had everybody set up. So in other words, the liability routine, the one that you're mentioning now that had a routine, under the basic setup, it does not calculate the medical or the Medicare credit. So that routine takes gross wages only. So gross wages only. That doesn't mean that you can't take those credits. You can, of course, take those credits, but then when you take those credits have to be calculated manually outside the system on Excel or something. So the medical liability, employer medical liability, and the employer Medicare liability have to be calculated outside the system. We're calculating the gross wages, which is fine. You can use the PR tax liability report. And in the end of the PDF, I did talk about how to use the standard reports to calculate that. The other thing that the limitations of the basic setup is that it's possible to overpay employees. And this is what I was talking about up top here, that this person who paid $1,000 per day, if your payroll person when doing time card entry doesn't catch that, you could overpay them, in which case there would be some mistakes when you're submitting for your Social Security. You need to make sure to limit it to 500 and 200 per day. The third item is that the calculation of the credit needs to be the calculation of the credit needs to be manual, and then you need to so basically you have to calculate that credit. You have to take I mean, we just all assume that we need to be able to substantiate this in a case of an audit. And so you need to be able to say this is how we calculate our credit, and you have to be able to show this assuming that we get audited someday in the future. We have to be able to show them how we calculated the credit. What we've done at Silvertrek to make this easier is that we've built this custom routine for the codes. We've built the custom report, and we've made it so that we have a button on the time card entry that limits those things out. And that's an advanced setup that we are selling to help people along with this, along with setting people up on this. I'm not trying to make this into a sales webinar here. But that's what you saw on the original webinar, was that routine that we have as part of our advanced setup. And Jenna and I are working together to coordinate with that. We haven't had a lot of interest in that, and we are fairly busy, but we have some slots over the weekend to get people installed on this with the advanced setup, and also review your codes if you'd like. Any other questions that aren't so self-serving, Jenna?
I don't see any on the chat board right now.
Okay, cool. Let's see here. I kind of like self-serving questions. Right here. I'm going to go ahead and modify this, show my monitor, and we're going to jump in here. And feel free and continue asking questions as you see, and we will go ahead and answer them as they come up. One thing I wanted to show you here was how some of this looks once you run it. So I'm going to go in. I have two companies. I have my Silvertrek Systems as one of my test companies, and Example Excavating is the other. I have a particular employee that I have in here, and it's always dangerous to get into a test system. The developers are probably in here screwing around with something. But here we have Hillary Ponder, and Hillary Ponder has 32 hours of employee and 8 hours of caretaker for last week on this. So this is a person with an earnings code 100 and 101 that we set up last week, and we need to be able to calculate this. And so we can go here. Let's see if it blows up on me here. Oh, good, it blew up on me. And so what we can do is we can make sure that we're processing this correctly, and we have the employer taxes and the employee taxes and the medical insurance. So one of the things that we need to make sure of when we're calculating this is, and I'm talking about when you guys are doing your manual calculations, that the medical insurance, in this case, Hillary Ponder is an owner, medical insurance here of $251 needs to be calculated as what you get back on your credit. So it's not just the gross wages. The gross wages here, $2,244, we're going to get back on our credit, but then also the $251 on top of that. Then also, we're going to be able to take this, and this would be done manually on the basic setup, 2244, and we're going to be able to say 1.0145. That's for the 1.45 Medicare employer side. and we add that in. So our total credit for Hillary Ponder here is going to be that plus $251.73. We're going to get $2,528 back from the IRS via EFTPS. Let's go to example excavating here and see if we have any better luck running this. There we go, successfully processed. So here we have Carlton By. He has 8 hours of regular time and he has 32 hours of COVID-19 employee. Just a couple things to point out here on the deduction side. He's getting $58 of employee Social Security withheld, $13 of Medicare withheld. His medical insurance is a $500 flat rate here. And he's got $13 of workers' compensation pulled out in Washington State. Workers' compensation has an employee portion. On the liability side then, we can see a few different things. We can see the $354 here for the medical insurance for the owner. So this is the liability associated with this $500 for the deduction. And then we have FUTA being calculated on the full 940. So that means that 940 is being calculated just like it normally would on our full earnings. So the 1,444, 1,440 minus our medical insurance here of $500, right? 500. So that 940 is the basis for our FUTA, and it calculates from there. You can see this is also true on our Medicare. Now, this is where people this will go on our frequently asked questions page as soon as we can get that published. How can the employer FICA subject amount be negative? How is that possible? Well, the answer is that if we go back to our earnings codes here, this is not subject to employer Social Security, while this is $288 is, right? So we have $288. However, all medical insurance is a reduction of the amount owing to Social Security, and so we reduce that further by $500, and we end up with a negative 212. So this is one of the things that we went back and forth with Viewpoint, saying, hey, is this going to cause any problems, right? In our testing, we ran into this. We're going, is this going to cause any problems? And of course, these kind of payments, especially in this case, an example excavating case, this is a one-time payment on a month, and then they don't have any payments on the future payrolls. Some of you guys have it set up that way. Some of you guys have it set up $1 per hour and every week, right? The consensus is at this time that us in Viewpoint, that this is okay, that this is going to wash out, because this is actually true. This is not, there's a reduction of the subject amount owing and a reduction of the Social Security for this month. Of course, it wouldn't actually be a negative amount getting paid to them, because we'd be adding 58 plus 58, and then we'd be subtracting 13. But it's definitely a mind twister. It's like, wait a minute, why would this be negative? But we believe that to be correct, and we believe that will not cause any problems downstream. So then let's get down into these codes here. So you see the COVID-19 credit, we have 3 showing up here, but we only have 1 with any dollar amounts. This is the 1,152. That's specifically based on the earnings code here. So $1,152. It's the same, that's the subject amount, and because it's a -1 in there, we're just calculating this full credit here, 1,152, and this is going to show up in our asset account under the basic setup. So once we run this, we pay this, we can run our reports, our PR tax report here, and our tax deposit liability report. So we can run our standard tax deposit liability report, which would show all of the standard tax deposits, run our PR tax report, but run it for specifically 701 in our case, 704 to 706, 704 to 706. We can run it for this month, and we'll be able to get the total dollar amount of this credit when we go to pay our federal tax deposit liability. Do the math, the weighted average, and pull it back from there. Our actual credit that we would get in this case would be 1,152, which is the gross wages. Our medical insurance owner, 354.62. And then we would also get, added onto that, our Medicare, which is not the full Medicare that we get here, because this is based on the full 940, but only the portion of Medicare that's here, 1,152 times 0.0145, and then we would add that $16.70 here. And we would get a credit for Carlton Buy of $1,523.32. And all of that math is what I'm talking about substantiating in some kind of Excel document. It doesn't have to do anything fancy. We take this off our next federal tax deposit. This is all basic setup here. There's nothing fancy here. We did not set up any kind of routines to get this to work. This is all straight setup. Questions on this so far?
Got a question on is there a provision to delay employer Social Security tax from Bonnie?
Employer Social Security tax. I haven't seen a provision to delay the tax itself. I've only seen the provision of they're not going to have the failure to deposit penalty. They're going to waive the failure to deposit penalty when you anticipate a credit under COVID. The employer Social Security tax is not applicable to these wages anyway.
And also want to point out, thanks to Suzanne, she's posted up in the chat board, there are a few articles from ADP, and it looks like there's something in chats.senate.gov that have info on deferred payroll tax guidelines and things like that. So if you take a look in the chat, there's some info in there.
Awesome. Thank you so much, Suzanne.
And we've got a question from Crystal. It says, what can we do about pre-tax deductions that are subject to employee Social Security FICA? They're getting unable to distribute liabilities error.
So you're probably getting the same error that I was seeing on the test, the other test system here. Something similar to this. Yes, this is something that we're working through, and we have been for the last day or so. Let me pull that up. So when I process this, it says 501 is missing earn codes and basis liabilities are not coming through. So on this error right here, and this is, like I said, this is the test system, so it's always, the developers are always in there playing around. But what we have is we have this amount that is all COVID. We have a deduction of $500 on the medical insurance, and so the FICA Social Security is throwing an error saying that there is no subject wages. We are working with Gary Gilmore on that particular use case. So specifically, this is when you have an employee who works only COVID and has medical or medical, dental, vision, et cetera, that reduces Social Security. And so it throws that error. We have a workaround that we are validating. We sent that to them yesterday. We're validating that with them. We hope to be able to give you that answer in the PDF today on the basic setup. Short answer is that it adds basis codes in as a subject only on one of those. So you'll be able to see that, and it will be able to validate and process through. So I can't give you a full answer on that because I do want to make sure that we're not causing any downstream problems with anything that I suggest right now. But Gary and I worked on that yesterday, that specific error yesterday, and we did find a workaround. So I'll watch for that PDF, and I'll be sure to give that to you. Any other questions?
Yeah, from Ivy that in the example you showed, shouldn't we only get a fifth of the insurance because 4/5 was for regular employment?
The answer is maybe. Because in this particular example that I was showing, this is let's example excavating here. On example excavating, this particular Kellerton buy payment was, let me pull it up here. So this $500 is a one-time payment once a month, and that's all subject to the Social Security thing. It's not just 1/5 of it, and that's true about this one here as well. Although that can be debated, right? So the question is, can we prorate it? Can we prorate it against all of them? In this particular case, Ivy, though, if this was a weekly amount, you would be right. We would only get 4/5 of this amount. And so what I said was actually incorrect, and what you're saying is correct. We would actually only get 4/5 of this amount if this was a weekly amount, because 4/5 of the time, 32 hours out of 40, they worked on this COVID code. So yes, that would be true if this was a weekly amount. If there's a monthly amount, the answer is more complicated. But I would still have been wrong. In fact, I would have been wrong even in a greater magnitude. Then you would want to say, what percentage of this total can I count? And that would be 30. Well, if that's a monthly amount, we would say 2080 divided by 12. This is the monthly 173 hours in a month. 32 hours divided by 173 is 18% of this, and we'd only get to take $63 on there. In both cases, we do need to be careful that we only take the portion of medical that is associated with the COVID earnings. And so your question is absolutely right.
And a question from Greg asking if PRAP update will still work for the payroll taxes.
Greg EB, I'm glad you're here. The answer is yes, it will. So if I go to my liabilities here and I hit F5 to do the jump to, and I look at, say, federal withholding. You can see on the federal withholding, I have an automatic update to accounts payable. And this is what Greg's referring to. I send this over to accounts payable and I use it automatically creates a check that I can then pay. All we have to do to make this work is put that same vendor here. So come in here, put in that same vendor on the credit and put it in there. Now, so we'd put in the IRS, except for I hit F5 instead of F4. IRS, Internal Revenue Service, payable type, federal payables, PR liabilities payable, frequency, weekly, or always, however you have that set up. And you set this up the same way. One note on the basic setup. So even on the basic setup, this will work, but this will only pull in the gross wages, Greg. And so when you go to make that AP payment, prior to making that AP payment, you'll want to open up this in AP transaction entry, add a line for the portion of medical, and add a line for the portion of Medicare. And then you'll be able to use that to process through, because this will only pull in this amount. The advanced setup will pull in the full dollar amount calculated out if you have that routine. Good question. Okay, any other questions?
Yes, question from Jeff. He's asking about the reports. The federal tax deposit liability reports run weekly. The PR tax report can only be run monthly, quarterly, or yearly. Any ideas on how to best match those two up?
Good question there. Of course, that will work for us now. I believe on this report, if I run this for something that was actually taken, let's just say here, and we include the weeks and hours. Let's see if this is true. This might not be true. Of course, I didn't grab any. There's not any real stuff in the system for this. I bet there is back in last year. Do we have the information for the PR tax report here? So year-to-date gross and the amount. Doesn't look like we have the hours for this unless it's being calculated. That's a very good question, Jeff. I don't have an answer for you, but I will get you one by the end of the day in that update email, because that will absolutely be necessary on a weekly basis. And this will work for your very first paycheck of the month, right? But it wouldn't work for the second, and that's not an acceptable solution. I know there is a report in here that can do this. I'm sure some of you are wishing you could raise your hand and shout out to the class, and I wish you could too. But I will get you an answer on that. That's 2 promises I've made. Is it 3 promises I've made, Jenna? How am I going to remember all these?
I've been taking some notes, and please, like, if we've told you we're gonna, please email us as well.
That'd be great.
We want to make sure we get all this stuff out, and we get all your questions answered.
Yeah, and they are on the questions things here too, so that's good. Any other good questions?
So it helps. There's always good questions. Got a question from Bonnie. Has the IRS issued anything on revised Form 941s like we had touched on last webinar?
Nothing from the IRS since last webinar that I have seen. There's been some very good supposition, I can say, on the internet. And so if you use the Googly, you can go and read that same supposition that I have. But it's nothing from the IRS themselves, just people talking about what they think is going to happen. And I hope to see some guidance from them shortly.
And then from Valerie, the ER liability for medical insurance isn't prorated over the hours under the leave. Can we take the full liability amount?
That's the same question that Ivy asked earlier, Valerie.
Okay.
So the answer is you need to prorate it based on the number of hours they would work in a month. So what I showed earlier was sort of incorrect. It should be either, the based on the number of hours that they work.
And a question from Hannah. Can you deduct the full medical expense for biweekly payroll if the employee only takes 1 week of sick leave?
That would be the same thing. You would be able to take half of that.
And question from George White. If you have employees that typically work 50 hours, would you recommend creating OT earnings codes that calculates time and a half, or should you just do a manual adjustment to the rate when you key into the PR time card entry?
2 separate answers on that, and I think this deserves a whiteboard. Good question. Let me switch my view to the whiteboard here. All right, can you see my whiteboard, Jenna?
Yes, looks good.
Okay, so there is 2 answers. What to do with overtime when for the sick leave. This is both COVID-19 employee and COVID-19 caretaker. And we have, what do we do with the overtime in the family leave? This is the COVID-19 family. And if you'll recall, this is the additional 10 weeks beyond. First of all, the law provides on the sick leave, the law provides 80 hours. And it's paid at either 100% up to 511 a day, or 67% all round up to 200 a day. right? So we have under the employee leave, we have 100% up to $511 a day. Under the caretaker, we have 67% up to $200 a day. What it does, it just gives you 80 hours. It gives you 80 hours of paid time. It does not talk about, and it talks about the daily limits. So in that case, somebody who works 50 hours a week would only be getting paid for those 80 hours. It is possible in those 2 weeks, say this is week 1 and this is week 2, to pay them 50 hours here, but then it would cap out after 30 hours here. So it's just 80 hours. And then essentially they would be unpaid for the additional 20 hours-ish there. So the sick time provides for 80 hours. It does not provide an amount per week. Family leave, on the other hand, is different. It says to pay them a dollar amount per week based on their standard hours. So in this case, you would take the average of the last 6 months. And this doesn't only pertain to people getting overtime. This would also be part-time or overtime workers. So the average of the last 6 months, in this case, if they consistently worked 50 hours, then the average would be $50, and we would pay them $50 times their normal rate of pay times 2/3, or 66667. And then all of that would be subject to the cap of $200 a day. If they were a part-time worker, you average it out, and they normally work, let's just say 23 hours a week, you would multiply that by their normal rate, and you multiply that times 0.66667, and you would have that cap be $200 a day as well. Obviously, in this, when we enter this into the PR time card entry, we would you have to enter it in on a daily basis in order for that to be very clear for your payroll time clerk to make sure it's only $200 a day. You can enter it in as a single line item as 50 hours times their normal rate of pay, but then they just have to do the math and make sure that it's under $2,000 for the week, right? Because $200 a day times 5 is what the government is looking at. $200 a day, $10,000 total. In both cases, in just like here, the 50 hours and 30 hours, it is possible over these 10 weeks, although I don't know that I personally recommend this, it seems confusing at best, that we could pay them 6 days a week if that was their normal. Basically, instead of them getting $200 per day for 5 days, they get $200 per day for 6 days. That was interesting math up here. I'm surprised you didn't call me on it, Jenna. 2,000 times 5, 200 times 5 is 1,000. Instead of $1,000 a day for 5 days, they could get paid $1,200 a day, right? $1,200 total, so $200 a day, that's fine, times 6 days, right? And they could do this for several weeks. And the cumulative here, 2,400, 3,600, 4,800, etc. And then at some point, even though the 10 weeks hasn't yet run out, they might get short paid by, they might only get $300 that final week and $0 the week after that, because they hit their cumulative cap of 10,000. That is possible. You can make an argument for that if you can substantiate that and say that they normally work 6 days a week or 7 days a week. But it still would be subject to the $200 a day limit. And I don't know, this seems confusing. It seems like it would be better to just leave it at the 5 day a week and normalize it to a 40-hour week. Good question though. Any other questions for me?
Not seeing any new ones popping in. I know we are going to be posting the video, so if
Okay.
anyone wants to take a look at that.
All right, that's perfect. Yeah, so we are we have the website up and running for you guys. Please use this. You can also send me or Jenna an email, give us a call if there's any problems. For those of you who already have taken advantage of our routines, etc., on our advanced setup, so you can just click here and go through and get in touch through our registration page here, or else you can just email us and Jenna will give you a call. We are supporting you all the way through payroll. So if you're running into any kind of issues with our codes, we'll be on the phone with you, and you guys can call us anytime during that first payroll. That's great. And also, if you have already set this up, but you just would like us to review it and review what you've already done and install those codes, you can also just make sure that you got it set up here and just put in your information, and we'll schedule an hour and a half with you, get those things installed, and also review how you've set it on the basic setup. I am going to put out a third update. Is it third or fourth, Jenna? On my PDF, and so you guys will have all of that. I am anticipating a further one once the IRS gives us their guidelines. Okay, well, that's it. I guess if there's no other questions, we'll let you go. Thank you for hanging in there, everybody. I sure appreciate it. And feel free and reach out to either of us if you have any other questions. Recording will go up as soon as we can, and you'll see all of that information. Thank you.